right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to welcome you all back, and it's time to get started. So let's go ahead and pull up our bias chart and let's get started with the analysis. So, the euro dollar, man, the euro dollar's just had a real difficult time recently. We were having a real difficult time making any type of staging any type of sustainable gains. We came up here, hit the 110.50. In Asian trade, we were just breaching above it at 110.70, 110.67. Then we got slammed right back down. This, unfortunately, you're looking at, well, I know I'm looking at this as an inverted head and shoulder pattern. It's got to really start playing out like right now. If it doesn't, what you're going to end up getting is more of a, it's just, you lose your symmetry here, because if you, let's, measure it out. Let's go over to the hourly, actually. You look at the distance between this shoulder on the right hand side and the shoulder on the left hand side. You got a very symmetrical move. Okay, you got the right shoulder, head, left shoulder, and so we've really got to start making a move like today. And to me, it doesn't look like we're going to. But that doesn't mean that we can't move higher. The fact of the matter is we came out of a descending wedge, okay? We also basically, coming in and, consolidating or pulling back pulling back from a rejection of a trend line, so I still think that we can make our way higher. I just don't know if it's going to be all that pretty, you know what I mean? Let me see something else here. And by the way, no, you know what? I'm not going to say anything. I was going to say something, but I can't say it. Forget it. All right. So we also have, a little channel forming here, which means that I think we're very well supported. This is a 618. We already know why we stopped there. Okay, everybody knows. We stopped there at the 109.60 level. That was a 618 of this move. Okay, but there's a lot of support down here. I would be real hesitant about being short the euro down at these levels. I think it's a very messy market at the moment. And I think. I mean, me personally, I'd rather be on the short side of the euro as we make another move back up here towards the 113, 114 level. I don't think I'd be too comfortable being on the short side here. But you guys know this is like a 618 retracement as well. Oops. Wait, it's from the actual lows, right? Yeah. From that low, sorry. That was a 618 retracement. That's why we held there. And we're just consolidating. It's real choppy. I feel very uninspired about the euro at the moment. All right, very uninspired about the euro at this moment in time. Doesn't seem there's like no reason, in my opinion, to be really long here because it's kind of failed this little upside break, but at the same time, I don't really want to be short down here. And like I said, if we're going to start this inverted head and shoulder pattern, it's got to really start today, and it could. I mean, hey, we have PCE and advanced GDP numbers, or preliminary GDP, not advanced GDP, but preliminary GDP. Market's looking at 0.4%. How about if we come in a little soft, a little on the light side of that? We come in at, let's say, 0.2%. Maybe we come in flat. Ooh, that would be ugly, right? Yeah, I mean, we could see the euro dollar just go scoot right up here too. It's possible. So anyway, what I'm gonna write as support today is going to be now. Remember yesterday? Oh man, we were right here yesterday. I hope you guys took advantage of this too. was thinking about you yesterday, when this happened, because I just wasn't feeling up to trading. But I said, hey, if we break through 110, in the euro dollar yesterday, if we break through this 110 level, we might, go back and challenge like 109.80, 109.85, 109.80, and then bounce. And we did that. We broke through the 110. We went to 109.86 and then bounced. So I know on lunch money, a lot of you guys took advantage of that, which is great. I heard, a lot of you did, and I know many of you weren't around for the lunch money webinar. So hopefully some of you took advantage of that. I didn't. Like I said, I'm not feeling, I hadn't been feeling great, so I just didn't really want to trade too much yesterday. But now I'm feeling a little bit better. I wish I would have seen that today because I would have taken advantage of that. But anyway, what to do with the euro dollar right now? I don't know. I would say that we've got the support here at 109.85, and then we have resistance here at 110.65, and I think we just have to see if it's going to try to make a move to the upside. If not, there's not a whole lot of downside here. I mean, 1.0985. I mean, even if we break that, what you got 109.60 down here, 109.60. That's support just below that. I don't know how aggressive I'd get below this support. And then if we breach through this upside, we might get a little lift. Start rallying towards 111. But I mean, how much are we going to really move today? So 110. I think there's better opportunities elsewhere. 110. 65. All right. That'll be key resistance on the way up. And we're range bound. The cable. So what a really sluggish piece of garbage the cable is. But the pound, to its credit, it rallied. We were looking for a move back to 140.60, right? 140.60. We had a low here of 140.56, and like I told you yesterday, any rally up here is going to be sold, right? We talked about that extensively yesterday. Any rally back, as long as it stays below 140.50 or 140.60, people are going to be lining up trying to sell up there. Well, notice as we made our way up towards that resistance, remember when there's such a key resistance like that, there are going to be, sellers lined up, trying to sell here, 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 here. There's just sellers everywhere. And so as you run into that resistance, you run into a block of resistance. Sellers are standing in the way. It's like running into a brick wall of just orders. That's why you fall short of you fall short of this this resistance here. You fall short of it because you got so many sellers up here trying to get out. So we really ran into that wall perfectly. And that was it was just we ran into it and then just reversed. So it's I guess it worked as expected. I thought we might get a little higher, but we know, which is great, we know that support is at 139. That held us for the last couple of days. You can see it right through here, right? 139. Those wicks are holding. Resistance is at 140.60 still, and that's key. And unless we get above that, it's bearish. Period, end of story. Okay, nothing's changed here. Let's go over to the Swissy. I want to buy the dollar Swiss. Not today. I want to buy the dollar Swiss at some point. I'd rather buy it at 95 cents than where we're currently at 99 cents. I'd rather buy it at 96 cents. Okay. Takis, which is he's listening to this webinar right now, but he's also in our chat room. He's a Greek out of he's a Greek out of Athens. He brought out some pretty good comments today. He goes, he was like, you got to watch the um, European situation closely over the next couple of weeks. He says, there's a lot of there's like 20,000 people trapped at the Greek borders trying to pass into Central Europe. 4 or 5 countries in the EU are ready to accept some of them, but most of them are ready to cancel the I never pronounce it correctly, the Schengen treaty, which allows the, Europeans to pass freely amongst beyond borders. There's also, another, 1.5, is it 1.5 million people are waiting on the Turkish coastline to pass through Greece to Europe. There's this big, problem in Europe brewing, with all these refugees. So we got to be really, you got to be really careful. I think, obviously if the market gets risk averse, there's going to be, traders coming in and buying Swiss francs. Okay. There's going to be traders coming in buying Swiss francs, but especially if it's a European issue, which obviously with the Brexit, with maybe, this refugee issue, that if it starts to heat up again and it, starts to make headlines, the Swiss currency has actually been acting really well. I mean, you look at the Euro Swiss, the Euro Swiss has come from 112 down to 109.50 where we're at, and we've been as low as like 108 and change. Yeah. I mean, that's a pretty, that's a lot of, that's a lot of Swiss strength just over the last couple of weeks. So that really makes me nervous about playing, the dollar Swiss to the long side. As much as I want to play it to the long side, you can see these, drops here, and we bought it down here. I'd buy it again, but I would buy it here. This is where I'd be interested. It's very similar to, you got this move here to that move there, right? Basically, like, I'd be interested in playing it, somewhere down here again, you know, and that would be like a retest of this, trend lines, maybe somewhere down here, okay? Because we might fall short, but a similar move to this, then I'd be interested in playing the Swissy on the long side. I don't know how excited I am about the prospects of it right now. But I will tell you, currently we have a pretty well-worn range, and the one that we talked about yesterday, and I think we can just go ahead and regurgitate this data or these levels. Okay, we'll just put in parity and 98.50, I think. What? Right? Yeah, 98.50. I think that's what we had yesterday. 0.9850 and parity 1.000. Okay, dollar yen. So the dollar yen, got to be a little careful with this dollar yen right here, because I mean, I personally have been hoping the dollar yen would rally back to 114.50 to 115. I want to short the hell out of it up here. Problem is, the stock market's looking a little, questionable. But I don't like how this Kiwi and this Aussie and this Canadian are acting, by the way. I really, really don't. They don't look good. You know what? I close my Kiwi for a flat. I'm closing my Aussie for that's a loss of 40 pips, and I'm closing my Canadian for a loss of 15 here. Actually, it's more like 18. I close them. I don't even want them. I don't even want to deal with it right now. I don't trust this market. I think there's lack of follow through here. I don't like it at all. So just letting you guys know, The Canadian actually is probably one I should have held on to, but I'm not going to. I'm just not even comfortable with the market at this point. Just letting you guys know. Okay? Yeah, it's not it's not my cup of tea right now. Okay? I don't like how the equity markets are rolling over here. I don't like how the Aussies new low. I mean, look at these daily candles. By the way, here's a kiwi, right? Look at this inverted hammer. I mean, this could be a really ugly, false breakout. Aussie did the same thing. Is doing the same thing. I just don't. I'd rather not want the exposure. Look at the failed breakout again. I just don't. I don't want the exposure. I took some losses this morning. Small positions. They're all 1/3 size, but I'd rather not worry about them right now. Probably it'll, we got to get past the end of the month, which is actually on Monday. Well, I think a lot of the end of the month flows are going to be flushed through the market today, by the way. Hey, so look, like I told you, I just took some losses in the market. If you think that as traders we all make gains, look, I took a, 15 pip loss in the Kiwi. I took I actually have just taken some losses this week. All right. I took in the Aussie dollar. I ended up just taking what is about a 40 some odd pip loss. In the Canadian, I took like a, little over maybe about a 20 pip loss. Hey, sometimes you got to risk manage, and actually that's what we do is we manage risk, right? When things look a little risky, I'd rather take everything off for a small loss than have a bigger loss or them build into a bigger loss because I'm, so headstrong that I think something's going to happen. Um, and if I'm not comfortable, I'm not comfortable, right? And I hope you guys appreciate that we talk about this type of stuff, and we talk it through. Hope it makes sense to you. All right. Okay. Anyway, like I said, I'm just not comfortable with having any. Really not comfortable with having any positions on right now. I have just my Aussie New Zealand, which I think is going to 106 first. Um, I think it's going to 106 first, and I'm going to actually get kind of aggressive there, just so you all know. But anyway, what was I on? I was on the Swissy. Oh, yen. Okay, so here the thing I'm not really comfortable with the yen here is the yen hasn't really followed through to the upside. Okay, the yen hasn't really followed through to the upside, and if you start looking at some of these fibs, like we broke this downtrend line, you would think you get a little bit more lift than what we've had. We can't even take on a 618 here. There's a 113.40, which would be the 618, which would be a spike high, and I guess this right here will be key resistance right through here. So you got spike right there, 618. Let's get rid of this here. It's been just little follow through. Okay. So anyway, 113.40. This would be really key resistance if we can get up there. So we'd have to have some pretty damn good data to get up there. And even if we get up there, it's like, all right, well, so what? Maybe that's going to be a great place to fade some of those moves. So anyway, 113.40, support's at 112.50. That's would be all these little spike lows here on those 4-hour charts, and I think we can write that down. 112.50. Dollar Canadian. All right, so here is the dollar Canadian. Look at this damn thing. All right, so the dollar Canadian, as you guys know, this is the only one I actually probably should still stay short. I mean, I should still stay long the Canadian currency. I actually, I actually may reestablish a short dollar Canadian trade later today. I may. Not saying I'm going to. I may. It depends on, it depends on crude. If crude can rally through 34 bucks, if we can rally through 34 bucks, we can see a real big, big breakout in crude. I would be short the dollar Canadian, and I wouldn't mind reestablishing this. Even if I have to do it back at the lows, I don't have a problem. I think now any move back to re-challenge this trend line though, and re-challenge the 136.30 is going to be key resistance. Okay, so as long as we stay below 1.3630, in my opinion, it is bearish. Okay. And I know I was short. I actually took a little bit of a loss. I got out of it, and I did it more because I just don't want the exposure at the moment. But I would not mind seeing a rally here and reestablish doing this. Seeing a rally here, reestablishing a short position right here. Okay. But 135 is going to be support for right now. 135, and then any rally back to 136, 136.30 is probably going to be really key resistance. And like I said, I might actually get short up there if we can make it. 135 is support. Okay, it's not even great support. All right, I'll put you guys on hold for a little bit. When I come back, we're going to deal with the Kiwi, the Aussie, the dollar index, peso, Nordic currencies. Don't go anywhere. TGIF, people. TGIF. I'll be right back. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hey, we just had German CPI come in a little worse than expected, and it's pulled the euro down towards its lows of the session. This is another thing you got to watch with this euro dollar. Here's the daily candle. And again, we're just leaving wicks on both sides of the market here. A lot of dojis. We got this long wick. This would be obviously very impactful if we were at the top of a trend, but because we're at the bottom of a trend, I don't get too terribly excited about it. But man, just there's just another showing of just lack of follow through in the markets. You might actually get an opportunity to buy this sucker just below 110, maybe even before data here in the next 20 minutes. We might actually push lower, but I'm not worried about that right now. Let's take a real quick look at the Kiwi, and the Aussie. So here's the Kiwi dollar. So the Kiwi has shown us a real, this could end up being a false breakout too. Now, one thing I do want to obviously state is that we have this downsloping trend line. You can see right here. Okay, it's multi-year, and we're above it. Okay, now if we come down and we drop back below 67 cents, that's going to be a pretty bearish event for the Kiwi. Look at the daily. Just look at how the daily candle is forming right now. It's not very pretty. Now, I'm not saying that we're going to end the day like this. There's a lot of time left in the day. You just have to watch it. Be very careful. And like I said, I took a small loss, and I'm done with it. Not even want to deal with it right now. But if we can close above 67.50, that's huge. That's huge. That will say a lot for the Kiwi. That'll speak volumes, in the Kiwi dollar if we can close above this 67.50 level. But the flip side is if we break back below 67 cents, that's going to be not pretty. All right. So I think what we have to do is we have to mark up exactly that. The high of the day, which is 67.76. Okay. 67.76. That's going to be important resistance today. And where the hell am I hourly? There we go. Okay. And then support. Hmm. I actually think support's going to be right here, but I mean, pretty much this low, this 4 hour candle, but we can go below that. If I can just get an hourly, dang it, let's see if I can pull up a 30-minute chart. I don't know why my hourly charts aren't working. Okay. All right, so here's a 60-minute. Yeah, 67 cents. We got some rejections here. Okay. I think 67 cents will be probably pretty decent support. This is a 30-minute chart, by the way, since my 60-minute for some weird reason wasn't working. That's a 38% retracement, happens to be as well. So yeah, important. 67, that'll be important for support for the Kiwi. We need to hold that. If we don't, we break below it. That's not going to be that's not going to be a good thing. All right. I'm going to keep us in a range for now. We're threatening to turn bullish, though. Threatening to turn bullish. Hold on really quick. Somebody's asking me, is there a webinar today? Yeah, it's like our links. When's the link changed? Oh, I guess it changed a couple weeks ago. Hold on. Okay. All right. Let's go over to the Aussie. Here's the Aussie dollar. And let's go back over to, well, let's go over to the daily. So as you guys have seen in the Aussie dollar, one of the issues that the Aussies had is the Aussies struggled at the 72.50 level. I mean, how many times have we failed up here? And why are my charts taking so long to load? It's going to drive me bananas. Okay, I'll just do it this way. What? Hey, we hadn't looked at the Aussie here for a while. Remember we drew this butterfly out? But that worked just about perfect, didn't it? You know why I remember this? I I did this butterfly pattern of an expectation, and I think it was somebody, one of you, and I think it was Randall. Correct me if I'm wrong, Randall. Somebody took a picture of this butterfly and sent it to me via email. And we only had made this much of data at that point. We were right here. And I said, I bet this is a butterfly, and we're going to hit new lows in reverse. We're going to hit new trend lows in reverse. And that was the last time I looked at the Aussie via TradingView. And an interesting thing is that happened exactly like that. Yeah. Wow. Pretty cool. Okay. Anyway. Hey, there's my charts. Okay, so another failure again at 72.50. All right. That concerns me. Mirko says, I remember that butterfly too. Nice call, Blaker. Yeah, I know. Hey, thanks. I totally spaced that. But remember, we drew this out before it happened. I mean, we were literally right here. And I drew that out and said, I bet we hit a new low in the reverse. And anyway. Okay. Of course, I probably didn't trade it to the long side. I mean, I may have called it, but I don't believe I traded it. So it's easy to call things. It's not so easy to trade them, to call them and trade them, you know. Anyway, as you all know that. People call things all the time. Look, I called it. I called it. I called it. Yeah, how did you trade it? Okay, because that's where the rubber meets the road, right? I think my attention was turned to the Canadian at that point. That's why I wasn't really so focused on the Aussie, but that doesn't matter. 72.50.7250. It's key resistance. All right, now support for the Aussie. I don't need that. Let's go over here. So support for the Aussie. A little worried here that the Aussie and the Kiwi just aren't going to follow through. I mean, I'm going to write 7150, but because it still is same as yesterday, but um, yeah, we're still in a range here. These want to turn bullish. They just, we're just not quite there yet. Let's go over to the dollar index. AB says my rubber doesn't meet the road when it comes to trading. Good morning, Blake. Oh man. Well, hey, I'll tell you what. The rubber met the road when we were trading the Canadian currency. I may have missed the Aussie, but I schooled the crap out of that Canadian, so I'm fine with it. Fine with it. And I know a lot of you guys took advantage of that Canadian move, so I'm fine that I missed that Aussie. All right, so you can see the breakout point here that held as support. That's obviously going to be key support for the dollar, which is at 97.05. We still have the 618 right up here, which is 98.05, 97.05, 98.05. Really? So that's it, huh? That's our and I have that marked up. It's because it's the 618, not because of the high we have right here, which is 97.90. So I'm going to write 98.05, 97.05, and that's it. That's it. That's it. 98.05 resistance, and we are range bound. All right, let's go take a look at the peso. Peso, 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 peso. So again, the peso held 18 like a champ. I think 1836 to 18. I'm really, again, I'm giving you guys the hope game. I'm really hoping we break through here, hit here, and then reverse there. That's what I'm hoping is going to happen. I hope we, go here, and I can't wait to short the hell out of it right there. But that's my hope. I'm hoping we don't break through 18. And I'm not trading the peso right now. That is key support, 18.36 is resistance, and we have turned into a range. Let's go over to the Norwegian krona, still channeling, Swedish krona, still consolidating, nothing to do there. Did somebody say something about the Nordic currencies about, that they just seem to be range bound so much. Yeah, but when they move, you want to be around. They're some of some of my favorite trading currencies. I remember when MB Trading took that ability away from me after the Swiss took it away from me, took it away from us that were MB Trading customers. They took the Swedish krona away from us for, after the Swiss National Bank did what they did. And for whatever reason, they thought that it would affect the Nordic currencies. I was really bummed out about that. So I went for a good year without trading those Nordic currencies, and I really, really enjoy trading them. They just happen to be kind of range bound at the moment, but they are some of my favorite trading currencies, actually. All right, this is it. We're done for now, and we have data coming out in 15 minutes. So let's take some of your questions, going back to your questions from earlier. Column says...